On this episode of Fee-Based Financial Planning Mastery, I'm going to introduce you to the show and why, if you're a fee-based financial planner or if you're wanting to convert your practice to a fee-based one, you'll want to subscribe to this podcast.
Running a successful fee-based financial planning business is tough, and escaping the shackles of a commission-based financial planning practice is terrifying. When all you want to do is learn from those who know, learn from financial planners who are there on the front lines doing it each and every day. What if you could just open their kimono and take a look inside to learn what works and what doesn't? Now there's a place where the secrets to running a fee-based financial planning business are revealed to those who believe. Fee-based financial planning mastery. Ease your mind.
Hi everyone, it's Scott Plaskett here, and thanks for joining me. In this podcast, you will learn what's working and what's not in the world of fee-based financial planning. In each episode, I'm going to open my kimono and let you take an insider's look at what's working and what's not in my practice to help you take your business to the next level. I've been a fee-based certified financial planner since the early 90s, so believe me, I know the challenges you're facing. So get ready to learn not from a teacher, coach, or guru, but from a colleague who's on the front lines just like you. And I'd like to invite you to subscribe to my email internet newsletter to get the most up-to-date tips on how to build and grow your fee-based financial planning practice by going to feebasedfinancialplanningmastery.com.
And now for our feature segment.
Hey everybody, I'm just going to have a little chat with you about what's new with me. I mean, what we're doing here, this is a podcast, and I'm really excited about it because it's giving me a chance to sort of give back to the CFP community, to the financial planning community. It's something that I've been always wanting to do, and I really didn't know how because for the longest time, I was just working on an island by myself. I got up in the morning and I would go to work and I would speak with my business partner, who's also my wife, and we would, carry on throughout the day. We'd get the job done. We'd talk with our staff and that sort of thing, but it was all within those four walls, and it was in kind of a confined space. So I'm really excited about being able to talk to you today and be able to talk in this podcast about financial planning, how to run a fee-based financial planning practice, because it's something that I'm very passionate about. It's very near and dear to me. I think the industry, has really gone through some real changes and is constantly changing. The industry is changing so rapidly that the old systems that really built the industry we can't rely on them anymore. Compliance, number one, is one of the main things that drove me to a lot of the decisions that I made in our practice. Compliance is becoming more and more challenging. We've heard it all before. We've heard the stats in the past where years ago, the dollars spent on compliance was, a small percentage of the revenue that was coming in. And now the dollars spent on compliance are, upwards of 30-40% of the revenue that firms are generating. Compliance departments are absolutely huge. When I first started in this industry, I started with one firm. It was really just one person who was running the division of the company, and she was compliance. We then moved to a different dealer who had three people in total, and those three people, one of them was really involved with sales, one of them was dealing with operations, and one was more admin. So compliance was kind of really not a main concern. Although it was, you wanted to make sure you were doing good business. And one of the things I did appreciate with the firm that we ended up that we're still with today, I did appreciate the fact that they really did a lot of due diligence on the advisors that they took in to their dealer. So I appreciated that so much. It's not happening as much anymore. I think now the dealers are just struggling to make ends meet, and they're just doing everything they can to find good producers. But in any event, compliance is really one of the big challenges. Another challenge that we've got is that there's more educated consumers. Everybody with the internet and with they're that much more aware. They're paying more attention, and they're just taking the time to learn a little bit more than they knew before. Now, the problem with that is that a little knowledge is a dangerous thing, and so it becomes more and more frustrating from our side of the table. We're meeting with clients or prospective clients who think they know a little bit and think they sometimes know more than we do. And the reality is, I mean, sometimes they do, but the reality is when you're at the level that we're at, they don't know more than we do. And, they're making it more and more difficult because they're very skeptical. I mean, the media is not helping at all. We've had a lot of scandals in the recent past, market corrections. I mean, the overall market turmoil has been very difficult. And so the media is really playing off of that. And I mean, the media is sensationalizing a lot. Now, in some cases, it's warranted because there have been some scandals which are absolutely, they're horrible. And, rightly so. The people have been, convicted and are put away in jail for the rest of their natural born life. And so they should be because of the abuses that they took advantage of. But the reality is that as a result of that, there's a lot more regulation and the consumers are a lot more jaded, and it's becoming more and more difficult for them to trust anybody. And the regulators are stepping in and trying to help that. But what the regulators are doing is they're making decisions, and they're not making the greatest decisions. And so when the regulators are stepping in and, in some cases they're saying, well, we're just going to put away with commissions and completely. And so everything's got to have full disclosure, which I believe in full disclosure. But the reality is that, the industry can't change overnight. And for that to happen, especially in Canada, I know it's happened in the UK and it is changing very, very quickly there. And, the regulators in North America are paying attention to that to see how that's working. But the reality is it's not going to happen overnight, but it is on the horizon. And if we don't incorporate some decisions now to make sure that we're protected against that, we're going to find ourselves, sitting in a commission-based model, looking for where our next paycheck's going to come from. So we do need to start making some changes. And the reality is that, with the pace at which the industry is changing, my hope is to take a podcast like we've got here and to explain to people, listen, this is what I've done, this is what I'm doing, this is what's working, this is what's not working, and really just to help people make better decisions on how to move forward and to give them some confidence. Maybe there's a decision that they've been putting off making because they feel like they're by themselves and they don't know if it's going to work. Well, the reality is I've probably made that decision. And that decision was probably not an easy one for me, but, I did make the decision. Sometimes it wasn't the right decision. Sometimes it was the right decision. But I'm going to share with you what decisions I've made, why I made them, and, what it's done for me and how it's allowed me to grow my practice, a very successful practice, to a level that I'm quite happy with. Now, I am eagerly wanting to make it and take it to the next level. But the reality is that we've made the tough decisions, the toughest one being migrating our practice to a complete fee-based model. A lot of people are often asking me, well, how'd you do that? How'd you do this? And what are you doing in this area? Well, that's what this podcast is all about. We're going to explain a lot of those decisions we've made, why we made them, and the outcome of those decisions. So I'm just going to give you now a little bit of background on my journey in this whole world. I mean, I've been in the business for a long time. Early 90s is when I started in the business, and I've been around for a while, and I've been constantly practicing with the idea of financial planning, always behind me. I mean, I began working on my CFP designation while I was still enrolled at university, and I was in an honors business program there. And I became licensed in 1993, and I actually left university early. I mean, I was at school for an honors business degree, which was going to sort of take me on to my MBA, and everything was going to be the traditional academic route. And then while I was there, I caught wind of this whole financial planning thing, and it was very, very new at the time, and not very many people were talking about it. And I just, for whatever reason, it resonated with me, and so I really, really wanted to take advantage of that. So I actually started my CFP designation while I was at school full time. So it was a pretty busy ride for me. I always focused on financial planning. And when I started in the business, I mean, in 1993, when I first sort of hung my shingle, I was a young guy and, speaking with people who at that point had more money than I did, at that point, I really embraced the whole financial planning concept. Now, the comments I got were from other, at that point, commission-based advisors who were, they were churning out commissions like crazy. Everything they could do to find the next deal, they were just so hungry for it. And everything was about, converting it over into a deferred sales charge system to get the upfront commission and then move on. And they were just doing everything they could to follow that model. But to me, it was a sales approach. And I understand there's a level of sales that has to take place in this business, but the motivation wasn't really, it was they were there to help clients, and they were probably doing the best they could with the products that were available. But a lot of the products were commission motivated. And, looking back in hindsight, a lot of the products that were sold really were horrible. They didn't do anything for clients, and, they did nothing for clients other than make them feel like things were going in the right direction, because the guys who were selling them, had the sales techniques down. So my branch manager, when I really focused on financial planning at the time, my branch manager at the time came to me and said, "What are you doing? Why are you wasting your time on this financial planning stuff?" And I said, "Well, understand, I mean, people need to be advised properly, and the only way we can do that is through understanding a lot more about them. And the information that we're gathering right now is really just superficial. So we need to spend more time and really, really focus on that." And the branch manager at the time, he said, "I mean, whatever, if that's the business you want to build, go for it, but that's not where the money is." Well, I mean, nowadays, financial planning really is the business, and more people are trying to find out, how do I make that change? How do I bridge that gap from going from a commission-based model into a financial planning-based model? So back in the early days, I was in there and I was focusing on financial planning, and we were really building our brand in that regard. And one day, a new advisor walked into the office, and I couldn't think of anything else. That person became a business partner, and we started working together, and one thing led to another, and basically, that business partner became my wife. So it was a wonderful experience. It was a wonderful way to meet somebody who shared sort of the same ideals and whatnot. I mean, I love her. To be able to love your partner in business as much as you love your spouse, which in my case are the same, really gives you a huge sense of confidence. Now, it also makes it a little more challenging sometime, and we can get into to reasons for that, but I'm sure you can appreciate that working with your spouse is not always the easiest thing. But there are certain rules that we've put in place and certain things that we've done that I wouldn't change it for the world, because when you know somebody's got your back the way your spouse does in this business, it makes a big difference. So we really started growing our practice, and we recognized each other's strengths and really started to capitalize on that. I mean, everybody shouldn't be doing everything in the business. Certain people are better at certain or other things, and so we kind of gravitated towards that. So we in 1996 we then moved to our flat fee dealer at the time, and that was revolutionary. I mean, that was where the flat fee model for your dealer was unheard of, and a lot of the dealers were saying, "Oh, that model's not going to work. It's not going to fly. Costs are going to be too high. They're not generating enough revenue, so on and so forth." But the reality is, I mean, we embraced that model early on because we just recognized that the dealers weren't providing us the service that we needed to help build our business. It really helped to build their business, and it furthered their brand, and it did everything in that regard. But what it didn't do was it really didn't what we were paying for through the override model that we were involved with, we weren't getting the value from it. So I just recognized that, you know what, I'm just going to pay a flat fee, and I'm going to build my business the way I want to build it with my brand. And we moved forward with that, and we've been with that dealer ever since. So we've had a good success in moving with that dealer. So early on, we launched our trademark financial planning process. That was one of the biggest things that we did, because now we had something to build on. We had the concept and idea of financial planning, but we packaged it in such a way that it was uniquely ours. Nobody else could take that away from us. And it became a huge competitive advantage. Whenever we were speaking with somebody, apples to apples, they would look at, two advisors and say, "Well, what's the difference between the two?" But with us, they would see us and say, "Well, wait a minute. Yeah, but they've got this financial planning process. So yeah, I mean, that's different. They're the only ones that have that, and they're the only ones that have license to that, and they created it, so they must know what they're talking about." So it became a really, really big competitive advantage by putting the financial planning process and launching it early on in our career. Now, going on from that, what we then started was we started charging fees, and we recognized early on that, the advice we shouldn't be compensated on the advice by selling a product, because in some cases the right advice meant not buying a product. And I had a real challenge with the fact that we were giving away the advice, but we only got paid if we implemented something that generated a commission for us. And so we started to look around for other solutions, and that's where the fee-based system came from. And so we actually charge fees. I always felt from charging fees, it put me on par with other professionals. I mean, you go to your accountant, you go to your lawyer. What do? You pay them a fee for their advice. You pay them a fee for the time and effort they put into working on your problems and challenges and helping you with their solutions. So charging a fee just simply made sense to me, because it allowed me to be on par with other professionals. And because we were, there weren't that many people doing it at the time, I mean, hardly any at the time, it really gave us another competitive advantage. It gave us a uniqueness that set us apart from the competition. Now, we started out initially charging fees, and we thought, well, you know what, all the advice we're giving away for free didn't make sense, so we're going to charge a fee. But we got resistance, and so we stopped charging fees. Well, why did we stop charging fees? Well, it was tough to create value using the traditional commission-based methods. I mean, when you're working from a commission-based process, the commission-based process was all about selling something. And so when we started charging a fee, maybe it looked different, but it didn't feel any different. And so we then had to regroup and figure out, okay, well, how can we change things back again? So we revamped everything. I mean, the number of times we've changed our business processes and how we do things and rewritten things and made it better. And it's really quite high. And, we finally settled down and got into a nice groove. But early on, there were a lot of changes we made as we went through. So we did start charging fees very, very quickly again, because I just couldn't. We started, we were making the money on a commission-based model, but again, the fees just seemed to be where it was at, and to me just made the most sense. So we started charging fees again. Why did we do it? What sort of really motivated us to do it again? Well, compliance made managing assets, and that at the time we had a bit of a focus on the investment side. Compliance made managing assets a real ordeal. I mean, anytime we wanted to make a change to a client's account, because we did a lot of asset allocation and rebalancing and whatnot, anytime we made a change, that change then had to be documented in all these different places, and we had to paper the file properly. And the dealers started incorporating these trading systems that were monitoring the asset mixes of clients. And if the asset mix didn't match the Know Your Client form, the KYC form, if the assets didn't match that perfectly, then we suddenly got flagged, and the trade that we put through got put on hold, and we had to justify it, and then we had to go and get the client to sign another document, and it was just becoming more and more of a nightmare. So compliance really encouraged us to move away from the actual managing of those assets, but we wanted to oversee them still. So we started looking for other solutions with regards to that, and we'll start talking about those later on and in further episodes. We also recognized that the clients felt more confident when we outsourced to the best in the business. So from an investment standpoint, we began to realize, look, when we were the ones that were making the adjustments on our system, our dealer was saying, hey, we need to be able to cover our behinds, the CYA, cover their behinds on anything that was being done in the client account. So that's why we were having to repaper the file. So I thought about it. I said, okay, well, what if I can find a solution where any adjustments didn't happen on our system, so that our dealer wouldn't have to worry about the adjustments? The compliance then was parlayed and put onto the other institution. So we began to outsource that. We began to look for solutions that would actively manage a client's asset mix and account to keep it on target, but that those systems and solutions wouldn't show up on our trading system. And so we began to really incorporate and really embrace the whole idea of outsourcing to the best in the business. That then allowed me to really be able to, puff my chest up and say to a client, look, this is the best solution we've been able to find for you. I'm not going to be managing the actual asset, the individual securities on myself. I'm a boutique financial planner that, I don't have a chance to go and meet with the managers and meet with the management teams and go and visit various companies and, check out this and that and the other thing. I just don't have time or the resources to do that. But we're going to outsource that to the firms that do. And 100% of their business is all focused on managing the asset. And they actually are now sitting on the same side of the desk, because their revenue is generated their revenue increases when your assets appreciate. So it seemed to be a nice match. So clients felt much more confident with that, because, deep down, when a client comes to see you, they recognize that if you're the best investment guy, well, why are you meeting with them? Their accounts, maybe they've got 1, 2, 300,000, 500,000, $1 million. Even if they had $10 million, why are they just dealing with you? Not to say that you're not good, but if you were so good, it doesn't make then why aren't you managing $1 billion pool or something like that? So it just allowed us to be a little more on the level with clients and say, look, I recognize where my weaknesses are, but I also recognize my strengths. We're going to go find the right teams for you and start to implement through the best solutions we can find. So we did that. We went out and we found the best that we could. We put them through our own screening process and, narrowed down the groups. And, that did a few different things for us. Number one, it really gave us a lot of the attention we got from those firms began to increase, because when you start placing more and more of your business with fewer and fewer companies, you become more and more on their radar. So they pay attention to you. And what that means is that whenever you come up with any issues or things that need to be fixed for clients or something like that, you know what? They're going to make sure that they keep you happy. So by doing that, it just simply makes them pay more attention to you, which in return gives you the ability to give better client service to your clients. So we from that, we were very committed to charging fees for our financial planning process. And what we did was we carved out the financial planning from the implementation. So we focused on creating value in the financial planning side of the business so that I'd really feel more comfortable charging the fees required to make that side of the business profitable. So the reason why we were able to charge fees again is because we said, look, let's look at this and say, and look at it from the standpoint that if we were going to build our business solely on the financial planning side, what would we need to do in order to justify our fees and to be able to really add value? And when you place that emphasis on that side of the business and ask yourself, look, if I'm charging $2,000, $3,000, $4,000, $5,000, $10,000 for this financial plan, what would it have to look like so that I would feel like it was valuable? What would have to happen? What would I have to cover? What would be involved in that process so that I would really be comfortable with paying that fee? So when you look at it from that standpoint, the whole concept of charging fees, and I think a positive byproduct that we got from charging fees was that it elevates your game. It brings the whole process to a new level where if you're comfortable saying to a client, I'm going to charge you $2,000 for the writing of your financial plan, knowing full well they're going to get more than $2,000 in value, well, now you've got something you can really start to build upon. So we did that. We created an overall financial planning process. We talked about it earlier, where we trademarked the process. We named it. Now, the thing is, you've got to name it, and it's a bit of a weird experience to go through that when you start naming your own process. I mean, you kind of feel like Starbucks, where they've renamed coffee, they've renamed the sizes of coffee. I mean, it was weird at first. I was like, what the heck is a venti? What the heck is a grande? I mean, I thought grande was large, but then I realized that there was a venti, and it was even larger. So they've branded it, and they created their own language, which people started to embrace. And suddenly, people started to use the language. We've found that as well. By branding our financial planning process and naming it, people are now starting to use the terms back to us and identify the components of the financial plan with the names that we've given them. So it feels really weird at first, and we'll go through much more detail in sort of a naming process and how you do it, how you come up with the proper name. But the reality is, if you haven't done it, it'll feel really weird at first. But by naming your process, it does one thing. It makes it uniquely yours, and nobody else can touch it. Nobody else can actually say they use that particular financial planning process, because they don't. Only you do. And so it's definitely a competitive advantage. So what we did there was we created different programs for clients at different financial stages. So through the process, we ended up with a core financial planning process that we used as the core in general, but then we broke it off and had 3 different programs for people who were at different financial stages of their life. And then we also parlayed that into a corporate version for business owners. And by doing that, I found that the whole planning process, the closing ratios that we found for clients who were truly qualified for our services, and when I say truly qualified, not everybody is truly qualified for your financial planning service. Not everybody should be your client. You want to identify who do you work with the best and focus your financial planning process around that. Then when you meet with somebody and you go through introducing your financial planning process to them, what you can do is you'll begin to get a real clear sense of whether or not it makes sense for them. And by then putting a fee in front of them, it gets rid of the people that shouldn't be there. So when I say that our closing ratio went up, it did go up. However, we started turning away people who we didn't feel were qualified for our services. But for the people who were qualified for the services, man, our closing ratio went through the roof. And as a result of that, because people were now paying for our advice, they implemented our recommendations, and our implementation ratios, again, skyrocketed. Client trust and confidence went way up. Clients now came to us and they just absolutely loved us. They loved the whole process. They loved it because all of our recommendations were documented, were justified. They could basically look at everything and say, that makes complete sense. I have a real desire that whenever I'm coming up with a solution, I have to have a certain degree of logic behind that solution. Now, I understand that not all solutions are people move forward with solutions not because of pure logic. Most of the time it's emotion, but you've got to be able to speak to the logical side. When you can go through and present in a logical fashion that says, well, this is a solution. Here's the analysis that we've done to say why we think it's the best solution. Here's what we were looking for, and here's what we found. Clients look at that and go, yeah, okay, sign me up. I totally want to implement that. The other benefit is they don't want to implement anywhere else, because for them to implement somebody somewhere else means that they have to then find that person and then tell that person what they want. Well, no other. I mean, if you were an advisor and somebody came to you and said, okay, this is what I want, unless you're in the transaction business, where you're just basically there to take orders, you're going to say, well, wait a minute, I need to add some value to this. Let me take a look at what you've got. Well, clients have already paid for somebody to take a look at it. So it's a natural extension. If you don't have an implementation ability or division in your financial planning firm, then clients are going to think that there's something weird with that. I've seen firms and other firms, fee-only firms and fee-based firms, that kind of promote the fact that they don't have any implementation, but the reality is they have some sort of a relationship with somebody who, if they're not generating the revenue, they're referring it to somebody else. But, the reality there is as well, it's very, very difficult in my mind to generate enough, to do the work you need to do and generate enough revenue from that work without implementation revenue coming in. It's very difficult unless you're completely able to strip out all of your fees and charge them separate, even for the assets and whatnot, and charge them high enough. It's very difficult to do that. So it's easier many times to make sure you have the implementation services available, but also make sure that your fees are fully disclosed and they're fully transparent on those implementation services. So as I say, client trust went through the roof, and it was fantastic. We automated our entire process to streamline efficiency really, really early. Now, as a financial planner, you do a ton. That's one of the reasons why the commission-based model, in my mind, is kind of, people have held on to it so much, because they know they really just need to do whatever it takes to get the product is to get it sold. And once it's sold, they receive their commission. The reality is, when you start incorporating comprehensive financial planning into your practice, you're going to be doing a lot more, if you're not charging a fee for nothing, because a lot of the services that we provide, whether it be through our cash flow management or our debt consolidation strategies and whatnot, I mean, if the recommendation is to pay down debt, well, if you're not getting paid for that recommendation, it's the right thing to be recommending to a client, then you're not making any revenue. So you do need to make sure that you have that in your system. And because there's so much involved, you really want to take a look at your workflow, your business processes, so you can automate as much of your business processes as possible. The reality is that from a financial planning standpoint, when you're putting together a comprehensive financial plan, you are going through a series of similar steps for every client. Now, the results are going to be different for every client, but the process you go through, which is why it's important to document your process, the process you go through will actually provide you with the tools necessary to automate things. So you can break your process up into different compartments, and you can then start to assign different parts of your process to other staff members and so on, or outsource it or whoever, so that you don't have to do it, so that it frees you up. Because one of the challenges we found starting out early on was we got right into it. We started, getting clients in, writing a financial plan, and then it all came to a grinding halt, because now I was writing financial plans. And then I would go through a period where I was bogged down with writing financial plans. I couldn't meet with any new prospective clients, and it really just slowed the whole process down. Then I got to a point where I started meeting with a lot of new people, But then I wasn't writing any financial plans because I was so busy on the sales side of trying to sell a financial planning process. So you do have to make sure that you've got the process is automated for the actual writing of the financial plans. And we can go into that in much more detail. And I'm definitely going to go into that in much more detail because it's something that I'm working on right now, is really trying to automate and streamline that whole process to make that as efficient as possible. We also recognize the need to market our uniqueness. Okay. So, for the longest time, we thought, wow, yeah, we did a great job and everything we did was wonderful, but it was kind of like winking at somebody in the dark. We knew we were doing it, but nobody else did. So we needed to find a way of marketing our uniqueness. So what we did was we tested seminars and we went out and we said, okay, well, we've got a unique process. We're going to go out there. We're going to start talking about financial planning, which was different than most because most people were talking about here's the best investment solution or here's the best insurance solution. But very few people were tying it all together with financial planning. So we thought, okay, well, there's an angle that we can start to really focus on and we can start to market our uniqueness. So we tested seminars. And they worked. They worked really well, but they were costly and they were involved. So what I've done then is, I really began to look at ways of how do I take the information, the systems and processes that we've been using for our seminars, because they worked well. I mean, we were able to target our audience. We were able to fill the seats for every seminar. We were able to get, not only just fill the seats, but we were able to fill the seats with people who qualified for our services and were part of our target market. And our appointment booking ratio, we were getting anywhere from 30 to 50% of the participants at the event booking appointments for the coming week. So we had some really good success with that, but all it took was a rainstorm or a snowstorm or inclement weather or something like that, or even really good weather. All it took was some event to, derail the process a little bit. So, we did have times when we would, have RSVP'd and have people all set to come to the seminar, and then a rainstorm would happen. And yeah, the numbers went down. Now, fortunately, the numbers went up on the other side for the walk-ins that we got because we did get a lot of walk-ins. But, the reality is that I believe that we could have had more so long as we had everything come together. Perfect day, perfect time, all that sort of stuff. And so the reality is, sometimes it just doesn't work out. So I really looked for ways of solving that problem. So along came social media. So we've really gone for the last, couple decades now. This is the process we've come to, but now we've really come along and social media is becoming more and more prevalent. And so what I've done is I've embraced it. I've embraced it in the terms of podcasting, blogging, Twitter, Facebook, YouTube, webinars. Now, a lot of the financial community have embraced it, but they still don't know what they're doing with it. They don't have a goal. They don't have an objective. They don't have a reason for what they're doing. There are people who have Twitter accounts and they're tweeting a lot, and they're thinking, well, what the heck am I tweeting for? What am I tweeting? Who's following my tweets, and what do I tweet about? And I don't have the time to tweet, or Facebook. I don't have the time to communicate with people on Facebook. And so what we've done is we've really recognized that there is a rationale for why you should be on each one of these things: podcasting, blogging, Twitter, Facebook, YouTube, and webinars. Why you should be using each one, but don't look at them individually. Leverage your content creation so that it can really serve more than one purpose. So we've put together a nice process where we've really embraced the social media. We've solved the problem in our minds. We've solved the problem for how to use that whole process to build credibility, generate leads, and automate the whole process. Because right now, if you're following our Twitter feed, and I encourage you to follow Twitter account is FEE Mastery. So if you go, you can follow our Fitter tweet. You can follow our Twitter feed there. And, that will you'll start to see that, it's happening all the time. And while I've been podcasting right now, I'm sure a couple of tweets have gone out and I've had it all automated. So I'll talk to you about automating it, because the one thing I don't want anybody to do is to get caught up in creating a new job for themselves. Social media is not something that needs to replace financial planning. Financial planning is your core business, but social media can really enhance that. And so we've got solutions on how to make that work for you. So really the goal of the podcast, this is episode 0. Episode 0 is there because we're not really talking about solutions at this point. I'm sort of sharing you why I'm doing this and what I'm doing it for, to encourage you to subscribe to the podcast. And then every couple weeks, Really, I think at this point on the 1st and the 15th of every month, you're going to get a new episode sent out to you. And we're going to be talking about certain topics that are affecting me right then and there, topics that are top of mind at that point in time. What we're doing, I'm going to share with you things that have worked and haven't. The goal of this podcast, I put it together because the one thing that I've been asked time and time again is, how do you do what you're doing? You've got all these things set up, and how is it possible that you run a firm that's not a huge firm? We don't have a lot of staff. We've really pared it down. We've got, systems in place that run our business. How do you do all that? How have you been able to take so much time in the summer at your cottage? How do you take time off? And I'm not saying that because I want to brag about it. I'm saying it because we've got solutions in place that allow us to stay in touch with our clientele, service our clients, and give me a life outside of that. So, everybody I think is really looking for that. And so we've just got, we feel we've cracked the code on that. So I've always been asked, how do I do what I'm doing? And really, I've always kept it quiet. I've kept it sort of secret to myself. But the one thing I've noticed is that the CFP community, they're willing to share. A true CFP, people who are really in the business to help add value through financial planning, they're a pretty unique group. And so one of the reasons why I stopped going to industry conferences and to road shows and all these types of things, because I couldn't stand the people I was meeting with. I couldn't stand sitting there and have just overhear conversations of people bragging about the latest commission or the latest deal that they've done. And it was just all, I don't know, it just got all schmarmy, and I just didn't like it. So I said, screw it. I'm not gonna continue with that, because I don't like associating and speaking and whatnot with these people, because I got nothing to say to them, and they've got really nothing to give me back. So what's the point? Well, that started to change when I started doing a lot more promotion for CFPs, for promoting the financial planning ideas. And I began to get in contact with other CFPs who also kind of embraced the idea that, the promotion of financial planning was important. And so building that tight community, I recognized, hey, these are good people. These are people that are not solely commission generated, solely, revenue focused. These are people who want to do a good job for their clients and are putting solutions in place to do so. So, I started talking more and more with these people. There's a few that I, communicate with on a fairly frequent basis. We get together once a quarter and just sort of, talk about what's working, talk about what's not working. And I recognize that, there's a lot of people out there, and I live in a small town, and, there aren't that many other CFPs around. So it's very difficult for me to have a community of CFPs that I can turn to. So then the light went off, and I thought, well, I can podcast about it. And the CFPs who really want to do what I've done and are looking to solve those challenges that they're faced with of converting to a fee-based practice, well, this will attract them. And hopefully it's going to start to, encourage them to comment and sort of share their experiences on the blog at feebasedfinancialplanningmastery.com. So by working together and sharing what's working and what's not, the entire CFP industry will become a better place, a place where, clients are less skeptical and more confident with their financial planner. And the planners are more confident in what they're doing, in that what they're doing is right, but also what they're doing is profitable for them, because you can't do it unless you're making profits. You can't do it unless you're making revenue. And so this is all designed to help further the industry, make it a better place, get rid of all the skepticism that's out there, but also show people how you can do it and make a pretty good living at it as well. So I'm going to be sharing with you exactly what I'm doing, right now as the weeks and months go on. I'm going to be sharing with you, things that have worked, things that haven't worked, how we're doing what we're doing, because I'm recognizing that of all the planners that I know, the CFPs that I know that are right in my community, not once have I ever come up against a competitive, competition with them. I've never been in competition with them. And we share a lot about what's working and what's not working. And every time I get together, I've got one group that I meet with on a quarterly basis. It's a study group of other financial professionals. Not once have I ever come into contact with any competition against any one of them. And every one of them shares, and what they communicate to me on is they say, when we get together for our quarterly session, oftentimes we'll bring speakers in and we'll have different industry topics and whatnot, but it's the conversation between the sessions that the value is actually had. It's the conversation between sessions where you glean those tidbits of information, like, oh, That's what I was looking for. That's perfect. It's one idea. It's one topic. It's one concept that could change everything. So, we just recognize that there really is no competition between planners, and especially in the fee-based space. I've got planners that I know that are, 400 or 500 miles away, and we communicate. Well, what's the harm in sharing our best practices and secrets with them? I'm not going to get any competition with them. They're 400 miles away. So it allows you to really, really become, the best of the best in a community of like-minded financial planners who are all there to help each other out. And by doing that, I think it's going to make a really big impact and difference. The regulators want to put an end to commissions. They don't like the commission-based model. They don't like the embedded commission-based model, and they're doing what they can to make those changes. They've already started over in the UK. They've already, they've made some decisions. North America is watching to see how that works. We're having industry discussions about whether or not can commissions and fees work in conjunction with one another. The regulators really do want to put an end to commissions, and they feel that that's in the best interest of society, of investors in general, of people who are looking for financial solutions. So it's definitely something that's on the horizon. So in each episode, I'm going to highlight some of my business and explain how it's working, both the good and the bad, and hopefully spark an online conversation that we can all learn from. So, I'm not saying I have all the answers. I'm definitely not a guru, but I've been there before. I've been in the trenches. I'm currently in the trenches. I'm running my practice now, and I'm building a fee-based financial planning practice that I feel that if we could just get a group of others and a lot more other people embracing that concept, then, this is a group that's not going to have to worry about the whole idea of, losing commissions and whatnot. We'll be able to justify our fees and make sure that clientele continue to get the valued service that they're looking for. So, really what the point is here is let's work together, and make it a better industry for our clients and ourselves. So at the end of the day, what I really encourage you to do is go to feebased-financial-planning-mastery.com now and click on the episode 00. So that's our first episode. It's the inaugural episode that we're doing right now. Click on that episode, and there you can post any questions in the comments. Tell me, first of all, do you like the podcast? Secondly, do you have any questions? Anything you want me to answer in future shows? Any burning questions that you just don't know who to ask and whatnot? So what I'll do is I'll address those questions on future episodes. Make some comments. If we talk about a concept or a topic that's near and dear to you, or that you agree with or even don't agree with, I want to know why. I'm going to learn from a lot of that as well as you guys are. And by putting all that information online, it'll simply allow us to build a better practice for ourselves, add more value to our clients, and everybody, the whole industry will become a better place. So definitely check it out, feebased-financial-planning-mastery.com. Check it out now, and I look forward to the next episode.
You've been listening to Scott E. Plaskett, a certified financial planner and industry veteran in the world of fee-based financial planning. Want free resources to help you build a better fee-based financial planning firm? Visit ilovefinancialplanning.com right now to register for Scott's Inner Circle email list, where you'll get front-of-the-line updates on the latest resources that are driving profits to Scott's fee-based financial planning practice. All of the resources are pulled directly from the highly acclaimed Fee-Based Financial Planning Mastery Academy. Go now to ilovefinancialplanning.com. Build a better business and make more money with your fee-based financial planning practice today.